Hello, this chart profit video, Friday 21st of April, approaching 2.5 hours into the trading day. Looking first of all at the E-mini S&P, this is the pre-open. Just for one day, on Wednesday we saw the 3-month point of control migrate down to 23.41, down to here. But on Thursday we had a pretty constructive day. The E-mini opened, tested that point of control and then rallied. I marked aggressive buying and the point of control actually migrated back to 23.53. Once again, that's the important level to watch. We re-established the 3-month value area low down here at 23.35. Now this level was tested and rejected Thursday a week ago on the 13th. I marked aggressive selling. All looked pretty negative down here, to be honest, but we've had a constructive day on Thursday and we're just looking for signs that we can consolidate and improve. I suggested today that today's session would be an important test for the bulls. Can they auction the E-mini above this level, this green at top high? 80% of the time that usually happens within 1 or 2 days, so we're looking for that. Can they keep price above 23.53, this level here above the point of control? Can the breadth numbers, which have improved, can they hold above 50%? These numbers down here, percentage of stocks in my New York list, etc., greater than their 50-day moving average. These have all improved. Can we keep that positive indication going? And could we see a strong end to the week for the spider? And possibly a buyer's active weekly structure. We haven't seen one of those for 10 weeks. You'll see that in the ebook on Monday. So a good strong end to the week would possibly give us that for the first time in 10 weeks. So if we look here at this short-term intraday chart of the E-mini S&P, actually what's happened is we opened, that's the first blue bar, and thus far today we've printed below that point of control. So if we can see price back above here, that would be a good positive sign. If we just zoom out here, looking at the daily chart of the E-mini, you can see from this important high over here to the low. Always have to watch the halfway point here, which is about 23.58, almost exactly at yesterday's high. And yeah, if we exceeded that green at top high and we were printing time above that halfway point, much more positive look to this chart currently. And we always watch this halfway point, as you can see on here. Apart from this spike, had a little problem here with that level. You can see it even clearer on the spider chart. Apart from that spike, you can see the natural resistance at that halfway point yet to be overcome. Small cap chart, IWM, Russell 2000 ETF, faring a little better above its 16-month at 136 and above the halfway point off the March high, sorry, in this case the February high. So small caps actually improving relatively. The large cap indices not as strong with regard to price location. Price back underneath that 16-month down here would be a negative indication. Tech relatively strong and faring better at the moment. We just look at this halfway point here. We're currently printing above it and not having a particularly weak day here at the end of the week. Very similar chart for the Qs. There has been this week, just last couple of days, an improvement in the breadth indicators, percentage stocks in my New York list printing above their 50-day moving average, down here just greater than 50%. This indicator in the middle here, 5-day moving average of the net new highs 25, just about above zero. Gives the pulse chart a green in the center here for the breadth. We could definitely do with the chart profit price oscillator, the momentum printing above that zero level. Which currently it is not, indicating trend down, but we have got some green here, and obviously we've got that aggressive buying imbalance from the E-mini, which I denote by colouring the bar here green on the spider. So some improvement, but we need more. Let's look at the sentiment indicators. This is a public poll from AAII. Bulls percentage this week was lower, 25.7. It's actually a 24-week low. Bears percent was also slightly lower. I follow the 4-week moving average of the net, that's the bulls minus the bears, and at a negative 9.97, That is also at a 24-week low. A little lower if we have an increase in bearish sentiment next week, could take us below these two extremes here, possibly down to the lowest level from early 2016. That would be a clearer contrarian indication, I think. Looking here at the Investors Intelligence poll, bulls percent was lower, also at 51.9%. But the clearest indication from this sentiment indicator over the last few weeks was actually 8 weeks ago, when the bulls percentage reached 63.1%, and that was the highest since 1987, believe it or not. So a real extreme in bullish sentiment 8 weeks ago, which was the week just before the top there, the high. Around the same time we saw a peak up here in the Lipper US fund flows data. We're looking at the 4-week flow here, this black line. And that was quite an extreme, taking out the previous peak. That 4-week flow number is actually back below zero here. And this is the indicator we follow each day in the pre-open, my version of the Ridex assets ratio. And we know that on March the 1st, which was the high day over here, the ratio got above 14. It's only done that a couple of times. Last time was back over here. This is a contrarian indicator, and that was a very good signal. We're back since that point as the market's kind of tailed off. We're still above 9, but we are obviously lower than 14. But for a few weeks prior to the point where we hit that 14 extreme, we were printing down here 8s and 7s. So this isn't a particularly low reading. I'm not seeing any clear, at least long-term, contrarian bullish indications here. If the market were to rally and we saw, for instance, the ratio coming off, that would be a positive sign. Obviously haven't seen that yet. Also following data from Direxion. These are, just going to show you a couple of charts, triple bearish ETF assets. So if we're looking here, we're looking at the S&P 500 triple bearish ETF assets at the top. We're looking at the spider at the bottom, and just showing a couple of points on the chart there where the bearish, triple bearish assets increase significantly above previous peaks, and that's usually a healthy sign for the market. Currently, pretty non-committal information. If we saw these assets climbing, that would be a good indication. This is the Russell 2000 at the bottom here, and we've got the small cap bear triple assets at the top. And if we look at that kind of level there, if we saw a spike up in these assets like that, that would be a clear contrarian indication. That would be good news. Just want to quickly look at what I call the supporting chart. So we'll look at bonds, we'll look at oil, gold, and just see where they sit with regards to important levels and any implications for equity. From that, we're looking here at the TLT. This is the T-bond ETF with the relevant levels on it. I won't go through the history of this again, but you can see support down here at what was the major point of control rally back above the current one. And then we have the 8-month at 121.63, which was clear resistance after the level migrated to that point. And just recently, TLT has moved significantly above that point, putting this chart up here in a strong price location. So strong for bonds, that's usually not a positive for equities. We've been saying for a good while in the pre-open that oil could become a problem in the longer term for equities. Still kind of feel that way. The major is up here at 1144. Didn't like that level. I thought that was possibly indicating the end of something when the point of control of the controlling price of the current distribution moved to that point. We saw a sharp move down to the halfway point from this low, important low, to this high in this area here. There's natural support. We've seen a rally back, but oil is now coming off, and I've been saying as long as it remains below 1144, this is in the pre-open, this chart is in a weak position. So again, not necessarily a positive for equities. We've seen GLD, the gold ETF, gold moving into strong position. Cash looks pretty much the same. The major at 119.84, which was resistance at this point here, and again here We overcame that a few days ago, and also gold now in a strong position. And again, that indicates, as long as it holds this level, it indicates strength for gold. Again, not necessarily or usually a positive for equities. And over the last few months we've noted that movement in this chart, the dollar index, seems to be a reasonably high correlation with what's going on in the equity market. And currently the dollar index below this level here. We saw this rejection at the 6 month at 101. As long as the dollar index is printing below that, it's in a weak price location. And if we also look at Euro FX chart, we can see that that's moved or held a strong position above its 7 month here. So again, dollar not so strong here, and certainly not in the pound chart. We saw 4 days of consolidation above the 15 month, which is at 124.78, and then a spike up here on Tuesday with the surprise announcement of an imminent UK election. So again, this chart in strong position above that controlling price. Not so good for the dollar, which by implication is in a weaker position. So we have strength in gold and bonds, weak price locations for oil and the dollar. That would usually be interpreted as a bit of a headwind for equities. What's the first sign we should look for with a view to finding positives for equities? A good first sign would be the E-mini moving back above 23.53, its current point of control over 3 months. That would be a stronger price location, and possibly the first sign that we'll see, if indeed we do, of strength for equities. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.